Welcome to Newsnight, and tonight we will be discussing the state of the economy. Of course, the Bank of Uganda in the last few weeks did say they had revised their growth rate for the country to about 5%. But well, let's go to somebody who's done economics and has made economics part of his life, and he'll be taking us through the state of the economy at the moment here in Uganda, and that's on Newsnight in a moment. Welcome to Newsnight. The old man of the clan and also the CEO of the Independent magazine, Andrew Mwenda, who's joining us today live on Skype from Dubai. Andrew, very quickly, we saw in the last few months one Global Trust Bank, closing its doors. We saw Air Uganda shut its operations here in Uganda, and we've had several organizations, namely just yesterday, Uchumi, recording some negative profit growth. You want to take us through our economic times at the moment?
Well, first of all, I don't think that those anecdotal examples in any way reflect what is happening in the macro economy. Remember that you can have companies going bankrupt, individual companies, while other companies are prosperous. The last time I talked to the Minister of Finance in her office, she told me that the projected growth rate of about 6.2% would be achieved, and if it's not achieved, it would be a few points away from it. So I have this suspicion that the economy perhaps is doing better and is doing well. The only problem I have is, from my own personal anecdotal experience, is I have seen banks complaining. The lending has gone down, defaults have gone up. Remember, about 3 years ago, the ratio of non-performing assets to total assets in the banking sector was 1.7%. If you ask the Bank of Uganda right now, it is about 4.5%. When you have high default rates in the banks, it means that businesses are not doing very well. Now, it may also be that the businesses which are not borrowing are doing well. So what we do not know is the performance of the macro economy, but what we know is that at the micro level, there are many people who are feeling the pinch.
Andrew, let's discuss the impact of what you're saying, and looking at the fact that the big corporate multinational banks that are operating here, like Barclays or Stanbic Bank, have reported continued growth. Even the regional banks like KCB. But you have smaller banks that normally would be multinational, that have maybe a footprint from Nigeria, that are struggling here in this country. And then you have, of course, Crane Bank, which in the last few weeks was reported to be struggling because of one of its directors having disappeared. You want to shed some light on that?
But before you don't say Crane Bank is struggling. In 2012, Crane Bank made a profit of about 103 billion. In 2013, Crane Bank made a profit of about 68 billion. And that was because the new rules introduced by the central bank, they had a rate of 35 billion shillings in non-performing loans. Now, that is not a write-off, that was a provision they provided. If you have not been servicing your loan in 3 months, likely because many banks are not performing very much, the requirement is that you provide for it as a non-performing loan. If you look at Stanbic Bank in 2012, they wrote for about 90 billion, or at least they provided for about 95 billion worth of non-performing loans. Nobody said it was in Anders. When the bank first is a very liquid and highly profitable business up to now. And I don't think that the rumors you are hearing that the managing director Kalan disappeared with the 400 billion could be true. If anyone disappeared with the 400 billion shillings from any bank in Uganda, that bank would go under within a week. So, Maurice, please, don't listen to these rumors in Kampala and buy them.
And the other smaller banks, Andrew, and I know we have a bad connection because you're yes.
Is this. You see, if you entered the market later, let's say about 4 years ago, remember we had only 15 banks. So we have, the central bank has licensed about 6 new banks to come into the market. You have had high capital investment, you have bought a license, you have bought furniture, you have fitted your offices, you have done all these investments, so your depreciation costs are still very high, yet you have not yet expanded your clientele. It is difficult for a bank to break even in 2 years. So it is understandable if banks like EcoBank, if banks like UBA and others have not yet broken even. That is understandable. It does not necessarily mean that the economy is doing badly. Remember that these banks have entered the market with strong brands like Barclays, like Stanchart, like Grand Bank, like Centenary Bank, like Stanbic Bank. These are banks that have been in Uganda for a very long time, and it takes time for a new bank to attract customers so that its level of its clientele can be able to make it profitable. I don't think that it is surprising that the new banks have not yet broken even.
All right. And finally, Andrew, because we have a bad connection, the incentives. What are the incentives the banks are putting in place? Because even with the current interest rates, even with our CBR rate at 11%, the interest rates are still high, and they do not encourage Ugandans to actually go out there and borrow. We have an under 10% bankable population. How are we encouraging Ugandans to join this industry so that we can actually have money available for several multinationals or organizations to borrow and grow their business?
In fact, I think that the banks in Uganda, although they claim to have innovated a lot, I think that they are very uninnovative. If you are a small business person beginning, if you are a small or medium scale enterprise trying to do business in Uganda, you would find it very difficult to borrow, especially from the large multinational banks like Stanchart, Barclays, Citibank, and Stanbic. Why? Because they have financial rules and regulations that are set by the parent companies in the headquarters in Johannesburg, in Dubai, in London, in wherever it is. And these rules are heavily weighed against the small business persons or small and medium scale business enterprises in Uganda. Some of them, their rules are racist. You remember that a bank should be able to lend to you, Morris, on the basis of knowing your customer, that they have related with you over a period of time, and they have acquired a particular knowledge of you and trust that if you borrow, you can pay back. So you cannot write a rule to govern a bank in Uganda from London, because the people in London do not know. If you are independent, I don't think we have become an extremely successful newspaper, but I don't think it would have succeeded if there hadn't been Grand Bank, which is a local bank which understands whose rules are shaped and done in Uganda rather than in London or Johannesburg. So I can say, therefore, that the biggest constraint to business growth in Uganda, especially for businesses that need capital, is the high cost of interest. It is difficult for me to know why the interest rate is very high in Uganda, because we have very low default rates, so interest rates should be low. Of course, they can set the cost of capital, but most of these banks that get money from us do not pay us any interest on our current accounts. Therefore, that cost is also very low. But perhaps it may be that the demand for capital in Uganda far exceeds the available money in the banking sector. Now, if you have higher demand and low supply, you always have prices going up. So the interest rate may be high, not because of the risk of lending in Uganda. We clearly know that Uganda has one of the lowest default rates in the whole of Africa and in the whole world. Then that may be because there is a big mismatch between capital demanded or loans demanded and loans available before the banks.
All right, Andrew.
Do you know how you can resolve that, Morris?
Very quickly, yes.
It is through, if banks in Uganda had access to long-term money, and that long-term money would be if Uganda can pass a law to securitize things like mortgages, so that, you see, banks can lend long-term and then they package those loans, aggregate them and sell them to an institution like NSSF. So NSSF can make your savings, which you, Morris, will not be able to access for the next 25 years. Aren't you 30 years old now? How old are you, Morris?
Please do not mention my age on TV. All right, okay. Very quickly.
So you need about 20 years or 25 years for you to access your savings.
Yes.
So it is possible, therefore, for a bank like Barclays to issue loans and sell those loans to NSSF so that NSSF can buy them. If NSSF buys those loans, it means it's able to provide long-term funds to commercial banks and allow commercial banks to lend Ugandans for long-term investments.
All right, Andrew, well said. Thank you very much. Andrew Mwende there joining us live on Skype from Dubai. And that was Newsnight.